following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
We got Carlos from California. Carlos, what's happening?
How you doing, Tom?
I'm doing great,
How are
man.
you?
Yourself?
Oh, very well, thank you.
That's awesome,
Thank
man.
you very much. Can I make a comment real quick?
Absolutely.
For me, it's a real challenge every time I'm doing a trade. And thanks to your help, I've been able to done a lot of things as far as trading. And I know there's a lot of Hispanic people who is listening, and they think this is a lot harder than it looks. But with your help, it's been a lot easier to make things sound very simple.
That's a beautiful thing, man. Well, listen, we appreciate it. We appreciate it.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. To master love, you have to practice love. The art of relationship is a whole mastery, and the only way to reach mastery is with practice. To master a relationship is therefore about action. It's not about attaining knowledge. Market-wise, let's take a look at it out here. We have the Dow Industrials down 32, Nasdaq's up 18, S&Ps are down 4, gold contract up $3.10, trading at $1,326 an ounce. Silver up 8 cents at $19.05 an ounce. Platinum up $1.74 at $1,037 an ounce. Copper up 5.5 pennies at $2.15 a pound. Light sweet crude down $1.29, $44.19 a barrel. Bonds, you have the 10-year up 13.6, 130.12, 30-year up 16 ticks, 165.25. Both the notes and the bonds, folks, look to be setting up a monster ABC down, as is all the indices. The S&P, the Dow, the Nasdaq, you name it, downtown, here we come. King dollar down 315 ticks, trading at 95.33. The euro is up 29 ticks at $1.12, and the yen is trading at 102 and a quarter. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. Volatility, we got in spades. It looks like we got a nice B to C, a C to D of an ABC up. And this is going to be wild watching this whole thing shake out. So this is what you have. Monday, we come down with 221 million shares. Tuesday, you do the bounce, and we have 168 million. Takes it back. Yesterday, we go down with 182, and here you go. So, what do we have out here today? The SPY gets to $214.70, rejects higher price, has lighter volume, and here's your setup, man. Your A point on this is $218.94. Your B point is down at $212.33, so we're dealing with about $6. Your C point is the 214. So we're dealing with about 208.70, somewhere in that. I'll get you the exact number. So your swing point going from the 6th of July is laying out there at 207. You're coming into option expiration. Guess what? This is where this baby looks that it's going to be going. And just something you want to remember if you don't have the art of time in the trade. The A to B point is a straight line move. The B to C point is a ragged move. The C to D point is a straight line move. The aspect of what type of bounce you get also generates what the strength or weakness is in the market. And in this particular case, we have a market that is very weak. The NDX 100, the 3 Qs, same type of setup. Now, the NDX, no doubt, is stronger than the other indices because Apple has gone topside in. It's gone topside with price spread and volume, by the way, folks. That being said, guess what? In this particular case, Apple doesn't look like it can save the NDX 100, which is pretty wild because it has saved the NDX 100 a few years ago in a huge way. So what do we have with the NDX 100? This is what you have. Your high out here 118.12 is your A point. Your B point is 113.63. So let's see. I'm just going to ballpark that 118. So you get $4. It's more than that, but that gets you down to 112.67. And at 112.67, you're almost going to be coming back into the lower range. Bottom line, I expect you're going to see the volatility to continue in this market. What you're also going to see is each and every time that we're going down, you're going to see the volume come out of this market. Why? And we're going to go right over to the bonds. The bonds, first the notes. What we have with the notes is this. The 10-year note right now is trading at 130.12. The first price point that we were looking for in this contract was 130.05. It came down with a vengeance the last 4 days, and we hit 129.26. So what we did do is that you came back to your breakout area from Brexit, which is June 24th. Now what you've done, as we have done in the indices, you're bouncing on lighter volume, and guess what? You got another ABC structure setting up on the way down. So if I'm going to go over to the 30-year right now, we'll put the 30-year on a continuous contract so you can get a cleaner look at it. And what you have with the 30-year had, in the last 5 days, has gone from 172 to, we had a low out there of 166.10 yesterday. The beginning of June 24th was 165.25. Bottom line, another ABC structure setting up on the way down. Your A point on this is 172.30. So there's 32 ticks inside a point. So I'm going to call that 173 for right now, just to do it in my head. 166.10 is the low, so that's going to just 167. So you get 5 points. If this is the C out here, you got 162.26 coming at us. And percentage-wise, this is what we have inside it. Percentage-wise, you're at 1.69 on the 10-year right now. King dollar. What do we have with King dollar? Let's go take a look at King dollar. What we have with King dollar out here is this. King dollar has a sideways move today. We are trading 95.32. You're down 325 ticks. That's a sideways move, though, and that's a sideways move, folks, with light volume. King dollar is building cause to, first off, get up into the high of the 31st of August, which is 96.25. I expect what you're going to see with King dollar is that it wants to run to the 97.62. Gold contract. What do we have with gold? The metal itself continues to not be in bad shape. The metal is trading at 1327.10. We've done 127,000 contracts today. The price point that it looks like it wants to try to get into first off is the 1305. What I do expect you're going to see, and this has to do with the equities are basically pushing lower, and it looks like Barrick and Newmont are going to do monster ABC structures on the way down. I expect that you're going to see this metal down at the 1259 area. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the markets, folks, we have the Dow right now down $40. S&Ps are down 5. Nasdaq's up 14. And you can expect more selling as we're coming into close out here today. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow right now is down 53. You get the NASDAQ off. NASDAQ's up 10. S&Ps are down 6.5. And if we go take a look inside the Dow Industrials, strength versus the weakness, this is what you have. The strength is Apple. Apple's saving the world out here today, folks. Apple is up 3.2% or $3.58. That's putting strength into the Dow Industrials. Caterpillar is up 0.8%, up 66 cents. You get Home Depot up 0.2%. Now, taken away from it, Big Blue, IBM is down 1.4%. You have American Express down 1.3%. You have Chevron off 1.1%. Inside the NDX 100, we take a look at the NDX. What you have inside the NDX, the strength is Skyworks. That's up 3.6%. That is a Apple supplier. Apple, of course, is up 3.3%. Avco Technologies, that's a supplier. That is up 3.5%. And we have Norwegian Cruise Lines, which is up 1.7%. Taken away from it on the way down is Vertex Pharmaceutical. That's down 5.8% or $5.49. You have American Airlines down 2.7%. Checkpoint Software is down 2%, and you have JD.com off 2%. Let's go over to Vertex Pharmaceuticals for a second. That's taken quite a hit out here. Yeah, man, I guess it is taking quite a hit. So Vertex Pharmaceutical intraday today, we've had a price move of $9, $8 rather, not $9. It's gone from $97 down to $89. If we pull this back, and let's go look at this. Oh, this is vicious. Okay, so this has a high volume low. It's $75. This looks like it's a monster ABC structure on the way down. On the weekly, we put that on the monthly, and you have trouble in paradise. It's been building cause actually for about 6 months here. It'll go after the B point. The real question is going to be, does it break that B with volume? And we'll know soon enough whether you do break down and we break down with volume. If we go over and take a look at the intraday, the E-minis out here, what you have right now in the E-minis is that you have, let's pull this up. Okay, so it's had this small consolidation out here today, and we just came into the lows that were generated out here at 2 o'clock, and you come in with way too much volume. So on the 10 minutes, so the low that we just established at 21.15, we're 21.17 right now. that is saying, number one, that's going to get tested. And the real kicker is it going to run right into the 2112 from yesterday. This is very capable right now with 40 minutes left that you can really get some price destruction on the way down going here, which, you know, it's amazing because the type of energy that has already been generated in this market the past 3 days is pretty incredible, meaning that you come down Friday, huge, which takes a lot of energy. You go up Monday, takes a huge amount of energy, and you go down yesterday. And if, in fact, we sell off coming into this closeout here, it's going to be a monster heads up, folks, because what that is that is every bounce that's coming in this market is getting sold, but it's getting sold with a vengeance. It's not you and I selling this. Bottom line is that this is fast movement. It looks to me like the NDX 100. Now, this would be pretty wild if, in fact, we get this. It looks to me like this NDX, when I'm looking at these futures, wants to run into that 47.20 area, and we can get that today. And now, that's not that far down. It's 16 bucks down. That being said, however, that would be quite a move in the aspect of where we've gone from the highs to the lows out here today. And would also bring the idea that we do have an ABC structure on the way down much higher. Now, this is going to be the wild thing, okay? So check this out. If we go into the trend, what you have out here is this. The trend yesterday was high. A one-day trend high doesn't mean a thing in a volatile market. It was a 2.96. So a 2.96 means this, folks, okay, is that you have an aspect of, let's just say on one side of the aisle, if you walk in a big hall, one side of the aisle you get 100 stocks, the other side you get 100 stocks. What a 2.96 means is that everyone was selling the exact same stocks on one side of the aisle, but not only one side of the aisle, in a very quadrant of the aisle. That happens when you get fear in the market. That also happens when you're starting to get a bottom in. The problem is that you need more than 1 day of that. And then what you also need, and that was the first day that you had fear in the marketplace, which is good. Then what you have is that if we go over to the tick index, we got a minus 1447. Now, so what you need is you need a few down ticks. You need a huge trend reading more than once. Then what you need, folks, is this, is that what you don't need is a large uptick reading. And guess what? Inside the NYSE today, you get a plus 1262. You get a plus 1262 on a downdraft. Guess what? You're not even close to a bottom, because what that is people coming in buying, and you don't get that when bottoms are made. And then the last thing you need a rejection of lower price. Okay, so as we wind it, this is what you have. You're coming into option expiration. You have an ABC structure on the way down, setting up, and it's a big one. So get your stops in. That's the bottom line. Some of the high volume stocks out here. This is what we have with the high volume stocks. Actually, let me go pull up Wells Fargo for a second because let's see. Okay, so this just come across the tape. Wells Fargo said to be investigated by federal prosecutors. Thank God. I mean, I'm going to talk about this the next hour, but bottom line is that when you have 5,200 people fired, and you have 2 million accounts opened that the folks don't know about it, guess what? Someone better go to the can, because this is, you talk about fraud in an extraordinary way. The thing that's really bizarre, which I want to look at too, is it's going to be amazing if, in fact, they I believe they did too, let them pay the fine without saying they're guilty again. That thing is so weird, it's unbelievable. But this goes over the top, meaning that, and I believe they did allow that. You get a federal prosecution going, it'll be absolutely huge. The thing that's going to be really intriguing here also is this. Let's see if we pull this up. We're going to see just the type of hypocrite that we have good old Warren Buffett being, I believe, because I believe, yeah, there he is. So he's the largest owner of Berkshire Hathaway. I mean, not Berkshire Hathaway, of Wells Fargo. Berkshire, they own 10% of Wells Fargo. So we'll see what type of a statement he can come out with, because his mantra, okay, if you go back and you Google this, when he got in the middle of Solomon Brothers years ago, and his mantra, and this is his quotes for years, the quotes were the aspect that lose me money and that's okay, lose your reputation and that's it, it's over. And Wells Fargo, guess what? Just lost its reputation, you know, because the more that I think all of us look at this, like, we know that the banks have just decided that penalties are part of their business, but this one is absolutely over the top. You stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special 1-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 69. You get the NASDAQ up 5. S&Ps are down 8.5. And it looks like market-wise, we'll see. You know what's interesting is that the news on Wells Fargo, bottom line, really didn't knock Wells Fargo down, but what it did do is knock the market down. It kind of, the Dow Industrials in particular took another basically hit. So what we have here with the Dow now is this. So the Dow is down 68. The low that was established out here on Monday was 17,994. Now, right now, you're at 17,999. We'll see how this thing shakes out, meaning that you're already inside the lower range. When the Dow had broken out, the Dow broke out on July 8th. You get up and over this consolidation. Once you're back in the consolidation, guess what? It puts 17,063 on the table. That's how this shakes out. What is going to be intriguing is that it actually should be really hard to get through 17,946. The reason is that was the 24th of June. But bottom line, you get a failure right now. And when you get a failure busting topside, it can turn into a huge problem. If we go take a look at the diamonds, the DIA, what you're going to have with the diamonds is that you're at 180.15 right now, and we'll see if in fact this 179.92, if you're going to get the volume. And now I expect this is going to happen tomorrow. I don't see it today. What's cool about this though is that you're going to know very quickly, more than likely in the morning, are you going to get this ABC structure on the way down? The cool thing about an ABC structure, whether it's up or down, when it's a large one, this is a big move. This is a move that inside the diamonds, you're talking about 185.40 would be your A point. 179, I call it 180. So you got I'm still ballparking this, $5.50 gets you to 186.74. 176 rather. No. Yeah, 176. 176. Where is that? Okay, so that's the low of the 30th. Looks to me like it's going to be a rough week. That's how this thing is laying out right now. Let's go take a look at the XAU, the HUI. So the XAU right now, that's trading at $92.41. This, of course, is the Philadelphia Gold and Silver Index. This here is also building cause to try to get into the low that was established out here on the 1st. We'll see whether it's going to have enough juice. What has happened is that the way this came down, intraday on Tuesday and Wednesday is saying it's building cause to get into that low. Gold Bugs Index seems to be set up the same way. And this is an indication, just as these things have done in the past, the gold equities, the silver equities, they go with the market. That's how this is shaking out. When we got to a low Monday at 225.67, and that volume expanded to 34 million. So the 34 million was going against that swing point of 33. That's not a good indication. That's an indication that it wants to bust. And I suspect in both cases, it looks like they want to go back to the gaps that are open from June 2nd. That's the way these seems to be straightening it out at this particular point. Some of the higher volume stocks in this market, and this is going to be a low volume market out here today. What we do have, there she is. Okay, so you have Apple is the king. Here, let's go to Apple for a second, because the good news here for you bulls in Apple is that this is a decent move. Apple's up $371. You're at $111. Now, Apple's got to get over, and this is where this always gets dangerous. Apple's actually has to get over $112.30. Now, this move here, I can make the case, though, that you get an ABC structure on the way up. So 96.42 would be A. 110 is B. So you get $14 approximately, which gets you to 116. Oh, interesting, man. Okay, let me put this on a weekly. $112. Yeah, it's 116. Listen. We'll see how this shakes out. But right now, Apple is not only saving themselves, they're saving the Dow Industrials and they're saving the NDX 100. Because the amount of juice that they're putting in both of those entities. Right now, inside the Dow, Apple is the king, as it is inside that NDX 100. In both cases, that is what's moving the market. Some of the other Dow stocks out here, this is what you have. We have Honeywell is up 221. You get Big Blue down 210. Exxon is off 88 cents. Coca-Cola is down 24. You have Oxy down $1.89. Let's go to the XLE, and we take a look at the XLE. So the XLE right now, that is coming down with monster volume. In fact, it just broke a swing point. Oh, look at this, baby. Okay. So the XLE is down 88 cents. It's just broken the swing low from September 1st, which had 16 million shares. You get 20. So the XLE is making its way down to the high volume low of $64.11. XLE has also failed on price, failed on volume as it busted topside on the 8th of September. The XLF, we go into the XLF, we take a look at the XLF. XLF, oh, look at this, unreal. So the XLF also is setting up, maybe I already did it, yeah, 20, we're right at it. So what the XLF has done is this, so check this out. The XLF also has failed as it busted topside. It busted topside on the 29th of August. You came back down, and when you came back down, folks, you came back down with monster volume. We came down with 70 million shares. You came down with 67 million shares. Bottom line, it's inside that range, and this is just wild. That's saying that the XLF can get down to the $21.32. That's a big number. What is going to be pretty wild here is this, is that, let me go over, and I suspect we're going to know more about this tonight. Let me see if it's on the top news yet. There's not much. It says federal prosecutors are in the early stage of investigating Wells Fargo. You know, that's what it is. You know, the SEC hasn't been able to do anything to the banks. So let me tell you something. The FBI gets their hands on it, and if we're talking about, we are talking about 5,200 people that got fired. That means that there's 5,200 people that can actually turn evidence over in the bank. That's the first part. The second part gets even better. You know what it is, folks? Think about how many of those employees may be sitting at home right now, or another employee sitting at home thinking about how much money has already been made in the marketplace by the aspect of turning over evidence with the whistleblower law. This thing's going to be such a mess. It's going to be amazing. Because what has already happened out here, you're talking about tens of millions of dollars, and it's going to be the first one that gets into the FBI with that type of evidence that is toasted and roasted. You stay right there, folks. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Dow right now is down 53. You get the NASDAQ up 14. S&Ps are down 5.5. And as you come over to our website at TFNN, folks, you're going to see right on the front page, our man, Mr. Steve Rhodes, is going to be doing a workshop tonight, 5 o'clock, as soon as I'm off the air. This workshop, what is it going to be all about? It's going to be, first off, for his subscribers. The subscribers of Mastering Probability. You can be a subscriber right now, get a $100 discount, come into the workshop. The workshop plus the newsletter is only $49, normally $149. And what you're going to be working on is this. The subject matter is the ultimate reversal patterns. That's what Steve's going to be teaching out here. He's going to be talking about the different time frames, whether it's a weekly, daily, or 30-minute charts. He's going to teach you the TD setups from Tom DeMark. That's going to be the TD setup, the TD sequential, and the TD combo. He's also going to go over H.M. Gottlieb's buy and sell pattern, learn to master the D point. He's going to also go over the price relative strength divergence pattern, and he's going to show you how to put these all together. So check it out right on the front page of TFNN, folks. It's only $49. Now, if you can't make it there tonight, bottom line, you can still get a great newsletter for the month. You can also, it will be archived on your page for a full month, and what you are going to want to do, whether you can make it live or you make it on an archive, you're going to want to go over that a few times anyway. That's what's so cool about the setup of how we have it, because what I can tell you, which I'm sure everyone knows, is that it's much easier learning by watching a video, and in this particular case, you're going to be watching Steve live, as to technically how these setups are, because what's pretty cool about the Tom DeMark setups, period, is that they, bottom line, are based on numbers and days, and that's it. So there's really nothing subtle that's underneath it. It either is or it isn't, okay, which is pretty cool. Our phone number is 877-927-6648. If we go over and let's go take a look at just the volumes in general and see where we're standing right here. We have on the NYSE, you're at 656 million. That means it's going to come in about 800 million. So that has the qualifications for a B to C of an ABC structure on the way down. NASDAQ composite, right now you're 1.6. That's going to come in at about 1.8. That also would have the qualifications for an ABC structure on the way down. Because what those qualifications are, folks, is this. An ABC structure on the way down, the setup is that you go down in volume. You do a counter trend bounce with lighter volume, you come back down, and you come back down with volume once again. When we take a look at the S&P, this is really dangerous because what you have in the S&P, and I'll bring up the NDX 100 too, and it looks like it's going to be laying out around the same type of setup. And what it is this, is that we're so close to the B point, and it hasn't hit it. The B point, folks, is 2119.12. And what you get there is this, is that when a market gets to, first off, fail on price and on volume, which it did today, and then you're closed and the market opens back up, guess what? Gets plenty of sleep, wakes up in the morning, has more energy, dangerous. Why is it dangerous? Because more than likely what you're going to see here and this is applicable, particularly when you're coming back inside ranges, is that you can jump the creek. And what jumping the creek would mean is this. I'll go back into you can learn so much about markets in a market like this, folks. Well, there's a lot of different reasons. One of the main reasons is that the moves are so fast that ESC, that markets like to do the same patterns, but it takes sometimes years for these things to unfold. In a market like that, you're going to have a lot of different patterns in the matter of weeks. So what you have here is this. If we look at the future, 2102 is back inside the lower range. If this market opens down tomorrow, meaning if you wake up in the morning and the futures are down even 10 to 12, that is jumping the creek. You jump the creek in a market like this, get out of the way. Because what you'll have, and you'll have a very fast and furious, particularly coming into option expiration, is you get a fast down move. And what's going to be really cool is this, is that the way this can set up, and this is what's really wild about option expiration, is that if we get that tomorrow, and we go down fast, furious, and all of the above, and you get a couple large tick readings, what we also can get is a beautiful bounce going into option expiration. So, you stay tuned here at TFNN. We do appreciate you growling and prowling with us out here, but this is going to get really intriguing. So, and you'd still what you would need by the end of tomorrow to do that, just to get a bounce going into option expiration, is you need a rejection of price. If you just go get a downtrend and you have no rejection of price, don't even think about a bounce. What the difference is that if you do get this and you have the volume start to contract and you get a bounce, then what that would be doing, that would be just setting up a much larger ABC structure on the way down. Let's go NQZ. Let's go into the NQs for a second, because the NQs are trying to save the market, folks. The NASDAQ 100 is trying to save the market. Thus far, what you have is this. We hit a low of 47.20. You're at 47.41 right now. Guess what? That low that was hit was with way too much volume. So your probability is still high that you're going to go right back to this 47. Is it 47? 1 second. 47.25. Not the low of 47.20, because that's laid out there from last night. 14. No, it's laid out there from the morning as we opened. So, we'll see how this shakes out. But that probability is that you're going to go right back to 25, which, by the way, at 42, that's a nice little move down. We go into the E-minis. What you have with the E-minis is this. E-minis are trading out here at 21.18. They're only down 4 right now. They got as low just a few minutes ago of 21.12. So they just grabbed 6 points. That also has volume down there. Now, check this out. This is pretty cool. So tomorrow morning, get out of the way. Here, this is what just happened. The E-mini, folks, okay, just busted yesterday's low with volume. So this is going to turn into a complex ABC structure on the way down. Let me pull this back 3 days. Intraday I'm talking about now. This is cool. Oh, my God. Okay, so your A point on this would be 21.49. Your B is the low of yesterday, 21.12. Not bad. 37 points. Your C point is no, it's still not that bad, actually. C point's 21.34. So that'd give you 2097. 2097 would be the number. It's Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials right now down 32. NASDAQ is up 17. S&Ps are down 4. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go over to the Russell 2000. We take a look at the Russell 2000. We'll put the IWM up. So Russell 2000 out here also looks like it's setting up a nice ABC structure on the way down. The IWM today got to a price point of $121.47. We came down on Friday, you came down with 54 million shares. You bounced on Tuesday with 33 million. You came down yesterday with 47 million. And what you have out here today is that you failed on price, failed on volume. You're going to do short volume. Your A point on this is the high, which was $125.41. Your B point is 119. Let's call it 120 just right now. So you get $5.50, which gives you 116.47. And what that would also do is get the IWN back inside the lower range once again. So, right across the board, these indices, we'll know in the next few days. And so what happens with an ABC structure on the way down or the way up, folks, this is what you also need. As you go after the B point, in order to have a confirmed ABC structure on the way down, it has to take it out with volume. Now, that still doesn't mean that you're going to get the full price projection, but your probability gets much higher if this is the case. And the case that we're talking about right now, I suspect that the probability is even higher. The reason being is that what we have laying underneath us is that on a short-term basis, you have the high volume low on the daily, weekly, and monthly from June 27th. That's $198.65 inside the S&P. We take this back on a longer-term basis, and it's quite clear where everything is. Bottom line is that it's already inside the lower range. That lower range that we're talking about, too, by the way, goes all the way back to December of 2014. You know, you can't make it outside of it. And if you want to see on the monthly what we did, when we went topside on the monthly in July, we did 1.6 billion shares. Well, guess what? It was taking out 3 billion. So you got over it, half the volume, and then you gave it up. And what you're going to see is that when you come back inside it, and it's harder right now because we're only halfway through the month, but if we're going to go a lot lower, what you're going to see is this, is that you come back in it. As we come back in it, you come back in it with a vengeance, meaning that you're going to have wide price spread once again. If that's what we get, I'll calculate this tonight after I get off just to see halfway where we are. If that's what we get, what you're going to see is that we're going to go after these lows that were established out here. The first low that was established brings you back to October of 2014, which is 181. Your next one is the August 14th low, which is 182. The next one is the January low of this year, it's 181. Those things are laying out there to get tested. And, we'll see, bottom line, how we come into them. You come into them with lighter volume, guess what? That would mean that the consolidation would stay in place. You come into them with heavier volume, and then really get out of the way. Because this is held up at these levels. Where the problem comes is that if they don't hold, there's not much in between that and a lot lower prices, not a small amount. You're talking quite a bit. What I do expect you're going to see there, though, time-wise, we're dealing with a lot of different aspects at the same point. It's September 14th today. We have approximately a month to go down, because what ends up happening, I've said this many times, you can't go down forever, you can't go up forever. What does happen on the way down is that on the way down, it's always fast and furious. Most of the time, you get fast and furious on the way down. Then what ends up happening is that you get a big bounce. And most times that you make the low, whether it's in September, the beginning of October, by the end of October, you're going topside again. And that could just be a counter-trend bounce. We'll find out. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials right now down 44. NASDAQ is up 16. S&Ps are down 4.5. I'm going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Seam in Dallas.
Hi, Tom. I love your show.
Thank you so much.
I've been listening to you since 2001 from my Seattle days when you were on a little station there.
I appreciate you growling and prowling with us out here, man. Thank you. Well, listen, thanks for bringing us from Seattle to Dallas, man. Appreciate it.
Yeah. I love all the hosts. I love your show. I'm addicted to it.
That's Hotel California. It's wicked, isn't it, man? Thanks.
All right, Tom. Nice to talk to you.
Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night, folks. Assume nothing. In any kind of relationship, we can make the assumption that others know what we think. We don't have to say what we want. We assume they're going to do what we do because they know us so well. If they don't do what we want, we feel hurt and think, how could you do that? You should know. Bottom line, folks, don't assume it. Market-wise, let's take a look at it out here. We have the Dow Industrials down 31, NASDAQ up 18, S&Ps down 4, gold contract up $2.60, trading at $1,326 an ounce. Silver up 7 cents at $19.05 an ounce. Platinum up $1 at $1,037 an ounce. Copper up 5 pennies at $2.15 a pound. Light sweet crude down $1.25, $44.20 a barrel. Bonds, the 10-year note up 12 ticks, 130.12. 30-year bond up 13 ticks, 165.22. Both notes and bonds, folks. Friday, Monday, Tuesday came down with wide price spread, accelerated volume. What do we do out here today? You bounce on light volume. They're setting up a very large ABC structure on the way down, as has the S&P, the Dow, the NASDAQ, the small caps, all of the above. King dollar. King dollar down 330 ticks, trading at 95.31. King dollar had a sideways move out here today. Light volume. King dollar is building cause for higher price. Euro. Euro is up 31 cents at $1.12, and the yen is trading at 102 and a quarter. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You have a failure on volume, you have a failure on price, you have, I suspect, it looks like a B to C of an ABC structure on the way down. So what do we do out here? You went up and got to a price point today, folks, of $214.70. Couldn't hold price, had volume of 127 million. It looks like it's a C point of an ABC structure on the way down. We're going to know real quickly. Why? Because your B point on this is $212.31. And what I do expect you're going to see is that we're going to go right after it tomorrow. And if that's what we get, and it breaks with volume, your price structure, your A to B equals C to D is $209.30. Anything under the 210.92 gets you back into the lower range. That means you had a false break topside, which we had done on the 8th of July. On the 8th of July, that's where we are right now. We had gone from $210 to $212. Bottom line, it's coming back into that area, and this is where the probability is really high that we're going to have a failure here and go back down, not only to the ABC structure, but to the low that was generated out here on Brexit Day, well, the day after, 2 days later than that, on the 27th of June, which is $198.65. The reason being, number one, is that that's a high volume low, which wants to be tested, and how we came off these highs. On Friday, we came off the high and we had volume of 221 million. We bounced, and it was a heck of a bounce, on Monday and did 168 million. We come back down with 182 million yesterday. And guess what? We bounced today and couldn't handle the price, and we had 128 million. So your correlation is you're going down with 221 million, you went up with 128, couldn't handle price. That sets up the ABC structure on the way down. NDX 100, same type of setup in the NDX. The NDX, as is the Dow, has been saved by Apple. NDX is up 55 cents at $115. Also has set up, though, a B to C of an ABC structure on the way down. We had come down on Friday with 50 million shares. You bounced, and we bounced with 39 million. You came back down yesterday with 45 million. And today what happened is that it got over the highs of the last 3 trading days, and we did that with 27 million, and it failed on price. 27 million versus 50 million. Bottom line, this is going to go after the B point, which is $113.63, and we'll see whether we blow it away with volume or not. Gold contract. What do we have with gold? Gold contract, sideways to slightly lower. No big deal. Gold is building cause, folks. Number one, I suspect to get to the lowest swing point, which was established on the 1st of September. More so, and this is the benchmark. Your benchmark, and not only are the indices in the bond market, in the currencies, is the low of June 24th. And in gold's case, that is 12.59. Right now, we're at 13.27. What has already got to that point is notes and bonds. In the note market, what you had the low of that was $130.05, and we made it to 129.26 yesterday. Notes had a bounce today, and we bounced with 1 million shares. I believe that's going to be into 1.5 million. Let me just TYZ. What you're going to see, this is these bonds are going to lead the market down. You know, the Fed might not want to raise rates, but guess what? The market's going to. Yeah, so we bounced today in the 10-year note with 1 million contracts versus 1.4 on the way down. This is setting up another ABC, I suspect, down. And the A point on this is 131.5. Your B is 130. So that's $1.50 approximately, which will get you into about the 128 area. We take a look at the 30-year. If I put a continuous contract up in the 30-year, what you're going to see is that the 30-year, the breakout area was 165.25. Yesterday, we made it to 166.10. This is also setting up a very large ABC down. And, you know, I can make a case right now that 65, let's see, man, it's intense, 55, 53, that this 30-year bond wants to go back to 153, 160. That's intense, man. 153 was the swing low from January of this year. That's how that's set up. And, you know, we'll find out if that's where it wants to go, but that's what it looks like. King dollar. What do we have with King dollar? What you have with King dollar is this, folks. You've had a sideways move. We're at 95.31. Now, just the opposite. On Brexit, that went higher. That went from 94 to 95.5. It already had come back, tested that area. We tested that area on the 8th of September, rejected it with lighter volume. Now what you have is that good old King dollar wants to go up into this $97.62. And the market, folks, by the way, can't stand a strong dollar once again. This is Tom O'Brien. This is TFNN. You stay right there, folks. We come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished down 31. You had the NASDAQ up 18. S&Ps were down 9. And into that close, there's something that's going on there because they took the NASDAQ, the NQs, and the E-minis down. And E-minis down 5 points. The NQs down 10, folks. So bottom line is that something, because there's a couple equities that evidently are imploding out here. We'll find them for you. Now, let's go over to our man, Mr. John Logan, as we do each and every Wednesday at 20 past the first hour. And don't forget, folks, John kicks us off every trading day here at TFNN, 8 to 9 Eastern Standard Time in the morning. Great show. As you come over to our website at TFNN, what you're going to see right in the scan on the left-hand side, you're going to see TAS Profile Scanner Plus. As you come over here, you can test drive the scanner right here, right now. Amazing piece of software. John goes through the markets each and every trading day. And it's always important, but it can't be emphasized right now, folks, how important it is. Why? Because these are world markets. They trade as world markets. And what is amazing, not only just in the equity side, the currency side, but the bond side. The bond side right now, as this sell-off was in bonds, bottom line, it was right across the world. John Logan, what's going on?
God, good to be back with you. I hadn't been here in a while on Wednesday. How are you?
I'm doing great, man.
Good,
and
good.
And I know you are. We were talking a little bit earlier. And, folks, it's so cool. John not only knows the market's upside down, but he's a great farmer. And we were looking. No, seriously, man. I love it. I love it. No, seriously.
It's easy.
Yeah, well, you grew up with it, which is a total different ball game. And in that context, right? The reason I'm bringing this up, I'm going to switch gears just for a second because we're going to have you for a couple.
Let's run with it.
Because Bayer has been trying to take over Monsanto forever, and now they finally took them over. And the thing that's so wild about that, man, is that the headlines, folks, is that, Bayer goes from, if you don't know this, Bayer this is the largest takeover of a German company ever. And, of course, they're taking over Monsanto, who, basically
rules the agricultural world.
Yeah, in a huge way.
Yeah.
And Bayer rules the drug world.
Yeah.
The headline, if you want to hear a headline which is really wild, which I didn't know this, folks. This just came across, right? And I know you have a Bloomberg, John. You know what it says, folks? It says going from heroin to seeds. Because what I didn't know is that Bayer developed heroin and they used it for cough suppressant.
Right.
There's a story. Yeah, seriously.
And for newborns.
Really?
We're having, I think a lot of, the story is, I guess that was kind of one of those things where the housewife back in the day to kind of keep a baby
quiet
to some degree. Yeah.
Oh my God. Unreal.
Yeah.
It's just so weird, man. It's just like I saw this coming across. Here it is. Yeah. If you're watching Tiger TV, you can see the headline. It's the first headline, folks. How a marketer of heroin became a top seller of seed corn. I just read it. I'm saying to myself, man, it's amazing that what you don't know. Do you know what I'm saying?
Yeah. Well, you gotta kind of farm poppies to grow heroin, so it kind of fits together. You know what I mean?
Yeah, I guess it does. I don't know. Okay, let's talk the market. So,
all right. So you may just kind of talk about this for a little bit.
Yeah.
All right. Well, what I'm showing right now is something we have in the scanner. We haven't talked about this in a while, and I haven't even really brushed on it on the show a lot. I just, have really focused on let somebody else figure out the top, and let's get some technical reasons why we could possibly start looking at this from the short side. And that started happening. I was actually, this thing was spinning around near the all-time highs for a while, and then,
yep.
I was like, oh God, we're gonna do one of these up and then maybe down before we go down. And but the break happened technically, and the breadth of the marketplace, which is what the aggregate profile breadth that we show in the scanner. The weeklies started crossing over, turning negative.
Okay.
And the dailies, just really went nuts here about the same time. So when we start breaking down below some of those index levels, and I'm showing, this is the December contract now, but I'm showing this 2133 bottom, this number over here, which is the bottom of our balanced area on the weekly that we have absolutely pierced. And today we kind of rallied back, just kind of edged up into that 2033 area. And then, because the breaths were still negative, especially on the weekly and the daily and long term, we talked this morning. I never have a chance to really kind of go back during the day live and really talk about some of these things as they're happening. So in the morning, we do this show pre-market.
Sure.
And, we just try to set the stage on more of a longer term kind of inflection point stance so people can, we don't talk about 60-minute time frames and things like that because they're not really appropriate as the day unfolds after the show. So, we talk about some longer term kind of things to be aware of, and 2033 is definitely a big number. It's in the scanner right there. That's the bottom of the profile. And that rally back up into it with the breadth negative. We were talking about, you got to kind of sell resistance until, this thing change, the internals change. So as I'm looking at the daily right now, just to give you some stats on the intermediate, we've only got 34 stocks trading above the balanced areas and 331 trading below. And as we do these little kind of moves up into these areas where we can kind of sell resistance, you just almost have to blindly do it. And, that was really the case today. 2033 was a really cool number.
It's amazing. It's amazing, when it can come back up to that number. And, of course, because we've had, and we'll continue to have, folks, vicious counter-trend bounces, it's almost like, oh, man, is it going to go? Or is it just going to give it up, right?
Yeah.
Yeah.
Yeah, and a couple of, God, this, I don't know. I listen to, for comedic purposes, sometimes I listen to CNBC. I always listening to you. I'm always listening to you. But then I gaze over there. I was listening to Bob Pisani, and he was, well, I guess the reason is too many people are long stocks and long bonds at the same time. And I'm like, well, at some point, that equation, which has kind of been, people taking advantage of it, really being on the right side of that equation. We talked about this a year ago. You're supposed to be kind of balancing between a currency, treasury, and equity kind of balancing act. That's what your portfolio manager is supposed to do for you. And they've gotten the benefit of being long treasuries and long stocks for a long time. And now as this thing turns, you get the double-edged sword in the other direction. So, who knows if this is going to continue and almost magnify some losses, because, okay, well, I personally don't think the notes and bonds are really going to sell off too much here. But, it is, kind of a thing where, well, what do you think was going to happen at some point? Do you just get the benefit of the hedge all the time? No. I mean, now people are possibly going to lose money on both sides.
Right.
So, and again, these internals, I'll look at these internals relative to these balanced areas to really try to guide me when things break, and is it okay to get in the water on the short side? And I really feel like that's pretty much the case. And we're going to have some volatility here, but I don't think it's over on the downside. And again, last 6-7 years, what the deal is it's hard to stay the course on something like that. But these internals will tell you when that trade may be over, and right now it's still on.
Yeah. You stay right there, folks. John and I are going to be coming right back. And, on a note, folks, okay, bottom line, we want you to stay at TFNN. But if you're going to listen to something, if you really want to learn something, listen to Bloomberg, okay? Bottom line, no politics, all facts. That if you want to learn the market, listen, okay? You stay right there. Listen to TFNN, of course. John and I are coming right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got our man, Mr. John Logan, with us. We're talking markets. And, of course, don't forget, John kicks us off at TFNN every trading day, folks, 8 o'clock in the morning. So, right now, you're in the East Coast listening to AM radio. You're in the West Coast. You're in the middle of the country. Remember that you can get us 24 hours a day right on your cell phone. You go to TFNN.com, hit Tiger TV. It's on the right-hand side. You're going to get an amazing audio, video, in HD. You're going to be able to see all the charts. You're going to be able to see us. It works amazingly right on your phone, folks. And that's 24 hours a day. Live content, of course, every trading day, 8 in the morning to 5 at night, Monday, Wednesday, Friday, Tuesday, Thursday, 7 in the morning to 6 at night. John's on every day, goes over all the markets. We're talking right now about the TAS Profile Scanner. And this, by the way, folks, what happens here, which is really cool, is that it's crucial to understand what's happening, in the marketplace. And I don't expect you to be like John and I, and you're in this 24 hours a day, okay? And knowing that when things open. But what's so cool is you hit one button on the scanner when it comes up, and it's going to tell you exactly what's going on live in the whole world, right on the front page, okay? Which, John, that is so cool. Particularly now, it's a big day today and tonight, because if people have had this, they've seen how this has changed in the context of the last 72 hours, right across the world, right?
Oh, yeah.
Yeah.
And we talked about these breadth calculations earlier, but the internals in this scanner really, I don't like getting stopped out of the S&Ps. I'm a big fan of trying to increase probabilities, and a lot of times, trying to short the S&Ps. A lot of times, if you think the market's going to come off, we talk about this a lot in the morning. Let's try to find 6 stocks that,
That's right.
really aren't going to go up if the market goes up,
which is huge. Yep.
And if you're planning for this thing to fall apart, these are the things that already are showing their hand early, and we picked out some really good instruments in the morning that lately, even before this sell-off happened, that have been just kind of things that are sitting on the edge of the cliff and need a reason, some kind of market sell-off to really get some momentum. But if the market does go up, maybe it won't be as painful being short the things. So there's a lot of ways to mitigate the risk. I want to go back to the breadth for just a second and just to reiterate one thing that I was looking at during the day today. This is our 60-minute breadth calculation here. And as we're kind of approaching that 2133 area I was talking about earlier, even the short-term breadth stayed relatively decently negative. So that just kind of gave more reasons that it was, okay. Anything can happen, but okay to really kind of lean on that 2133 area to be short the index today. But going into the internals, I mean, this, the scanner really, I'm just going to focus on the S&Ps here, but there's every index, or I guess important index in the world. I don't know about the Mongolian index. We don't have that in here, but you can really kind of surf around the globe and find some opportunities if you got a brokerage account that allows you to trade instruments all over the place. You can find opportunity. There's over 5,000 instruments in here, including Forex and futures.
So check this out, folks. This is pretty cool. So Tom O'Brien, the big bad bear, right? This morning. Check this out, John. You're going to love this. This is hilarious. So what happens, folks, is that when we have markets like this, this is a trader's market. It's even though it's go down fast, okay, it's a two-way market. When you have fast markets, it's a two-way market, right? So I'm on the scanner this morning, John, right? I says, okay, here we go. I'm going to go look for longs, right? Because I just wanted to see how they were setting up, right? Well, what you had, folks, is this. And I happen to like the 4-hour.
Mm-hmm.
And
I do too.
Yeah, and what ends up happening, in this particular case, I says, okay, I want to see, we've had a fast and furious 3 or 4 days, right? So I wanted to see something that had not turned yet on the weekly, and the 4-hour was good. Now there was only 7 stocks, John, in the whole scan, and one of them. Yeah. So I brought this up. So check it out. Okay, now I didn't get this, folks. I'm going to show you why I didn't get it. Okay, but it was AVGO. Well, AVGO, man, was up $4.37 today. Okay, and I'm looking at him, saying to myself, "Well, look at this, man. If in fact, you had this is kind of the case that, as you were just talking about, that you can get individual equities. You were talking about the other side, meaning that got weaker, and this would be like, okay, this is one of the strongest in the marketplace, folks. And when the market goes up, this thing's going to be a rocket ship, okay? And it was so cool looking at it, and I didn't take it, and I didn't take it just because it was like, you know what, man, this market. What I had done, the folks know, they get the newsletter. I says, you know what, I want to see how this market trades for a couple hours first. And bottom line though, it was impressive. Let me say what PayPal did. They pulled up PayPal. The key to the story, folks, is that whether you're a bull or a bear, once you get used to this, how this works, okay, you're going to be surprised with one click of the button how it just brings it up. So, I went through 10, 12 stocks, and I said, okay, man, I'm going to let this play out for, a few hours first to see how this shakes out. But
no, when you talk about PayPal, I've got and this is an indicator in itself, really. When you look at, we got a custom sort here called breakouts. There's only 7. There's only 7 stocks meeting that criteria right now.
Look at that. Yeah.
Out of 500, which is kind of wild.
It is.
But PayPal's one of them here. So it's kind of breaking out above these weekly unfair highs. If you a lot of times in the old days, or things that are really high, they need to be shorted, or things that are really low on sale. This kind of takes that out of play for me. And
it does.
Really. Yeah,
big time.
Yeah, you find a lot of good opportunities here. Wynn Resorts is been just powering up and finally has cleared the congestion here. So, if the market is going to turn around and go north, and you're trying to find some long stocks, and you think that might happen, I mean, it's much better to try to kind of get a foundation in some stocks that are already raising their hand, going, "Hey, you know what? I'm ready to go." On the north side.
This Wynn Resorts, man, is a nice setup.
Yeah. No, there's a couple of good ones in here.
You had the consolidation. You already tested the bottom with lighter volume.
Mm-hmm.
Let me see this thing. Pull this back. Oh, yeah. Look at this. And this is, you know what's so cool about an equity like this, folks? It's got so destroyed. It went from $247 down to $52, right? Mm-hmm. It's at 107. And watch, what I love to do is that then you turn around and say, okay, tell me what a .382 dead cat bounce is. And watch this. This is where this gets wild. So even if you're wrong in the setup, a dead cat bounce gets you to 126.
Right.
And a dead cat bounce, folks, means the .382 retracement of a move. That's all. But in this case, it's a nice setup, man. It's pretty wild. And this is, now, in a larger context, this is what's really so cool, is that this has also proven like how weak the market is, that, you had Apple, John, was saving the Dow and the NASDAQ today. I was going
to say that you're talking about, this is an indicator in itself. Talking about some of these things relative to, Apple kind of supposedly promising to drag everything up. I mean, I'll tell you what's going to be shocking to you. I'm getting ready to pull this up. Downtrend reversals.
Okay.
Guess how many stocks are in that camp?
How many?
0. I'm showing it right now. So
wow.
There's really no.
That's intense.
Yeah, there's nothing really even wanting to turn around that's kind of been, languishing.
Unreal. You stay right there, folks. John and I are coming right back. And guess what, folks? We're going to talk about Wells Fargo on the way back. We're going to talk about one of the largest banks in the world that are taking us all to the cleaners. John and I are coming right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special 1-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and to reserve your seat today, visit the front page of TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. And folks, as you come over to our website at TFNN, what you're going to see right on the front page, our man, Mr. Steve Rhodes, coming right up at 5 o'clock. It's going to be doing an outstanding workshop. It's going to be the ultimate reversal patterns. You can come into that workshop for only $49. That is a $100 discount. You're going to get a great newsletter for a full month. Great workshop. He's going to be talking about the Tom DeMarc's TD setup, the sequential, the combo, also Gottlieb buy and sell patterns. So check it out right in the front page of TFNN. We're talking with our man, Mr. John Logan. We've been talking the TAS profile scanner. Bottom line, we're going to talk Wells Fargo. And let me just read you this quote, John. Okay, this is pretty amazing. So
lay it on me.
Well, Wells Fargo, folks. Okay, bottom line, got fined 100 and let me get the exact number. I believe it's 185 million. They fired 5,300 employees. They got fined 185 million. Of course, that is fined without saying they did anything wrong. And they opened, folks, let me see how many accounts. I believe it's over 2 million accounts fraudulently, okay? That being said, now, and here's the kicker. Tommy and I, we talked about this morning, my son, on our show at 10 o'clock this morning. But listen to this. The person who is in charge of this unit, okay, let me read the first part of it. A federal agency used her Wells Fargo unit as a cautionary tale, imposing the largest fine it ever levied. Her bank fired 5,300 employees for acting counter to the values, but questions are now circulating about Kerry Tolstad, the unit's leader, who set to depart her post with $124.6 million in stock and options, and whose compensation was, for the last 5 years, targeted by the Consumer Financial Protection Bureau, including a yearly incentive bonus of $5.5 million in stock. So check this out, though. This is the number, folks.
Sickening.
Listen to this number, though. This is what is amazing. Wells Fargo saw a number of changes during Tolstad's tenure, particularly the end of it. Consider this. In 2014, around the middle of the roughly 5-year period reviewed by the CFPB, Wells Fargo set a record net income of $23.1 billion. So they made $23.1 billion, folks, right? Out of that, the Tolstad unit, which has this fine, was $14 billion of that $23 billion, folks. So that one unit did more than half of their net value. It's just amazing. Now, when we were talking about this morning, you know, the feds hadn't been on them yet. Now, this afternoon, you know, bottom line is that the federal prosecutors are saying that they're going to investigate it. Isn't it amazing, man?
You know, that didn't shock me when all this news came out because I you know, I don't know if you watch my show all the time, but I've kind of slammed Wells Fargo periodically just because it's just such a pain to deal with them in general. And that actually happened to me personally. Is they lopped some new. I caught it like 4 or 5 months later.
Really?
They put some new $300 security benefit feature on my account, on my corporate account. And I didn't catch it. I was like, and I went in the bank and I said, you know, you got to sit there for 3 hours to talk to somebody, but. I go in there and say, what is this? Like,
so you're one of the 2 million accounts. Amazing.
How did this happen?
Yep.
And then they really dug into it. They ended up giving me the money back. But, you know, a lot of people don't catch little things that are going on in their account, like especially little small things. But, you know, $300 a month, it was something to kind of get my radar up. But when I went in there and I was like, well, who did this? I mean, like, who signed me up for this? Oh, this was so-and-so. And, oh, she quit. The girl that signed me up for it quit and got her bonuses, then quit literally the month that this started. So I personally know that this, you know, can and was happening there, and it's shocking. I mean, 180 million is a rounding error to these people.
Well, yeah. You know what's amazing about this, folks? This is why we're going over it. When you look at the 180 million, right? But then. In this article, folks, it's showing that this unit made $14 billion. So $180 million, you can do that all day long.
Yeah, it's like, you know, kind of joke about Jamie Dimon. I mean, like, how many big mega fines have they had for currency manipulation, all kinds of crazy things? And, they just weigh it out. It's like, okay, can we make more money than the fine's going to be? Let's go ahead and move forward with the concept of fraudulent behavior. But, you wrap somebody on the beak, throw a couple of people in jail, everybody kind of wakes up. So I don't know why they don't do this and just follow through with it, go in there and clean house. And of course, that might wreck the stock price for a while. But
well, here, there's another quote here that Tommy picked up on this morning. Now, this is pretty cool, folks, okay? So you have the CEO coming out, and the CEO is claiming that he had 5,300 employees that were rogues, basically, okay?
Think about that. Not only do they get just a minuscule rounding error slap on the wrist, do you know how much money they save by getting rid of 5,400 employees?
Yeah.
I mean, they actually come out way ahead on this whole deal anyway, It's nuts.
There's no doubt. So listen to the quote. So this person, folks, announced that she was going to leave the bank 2 months ago anyway. But you get a picture of something that, that they're in the middle of the investigation. This person knew exactly what's going on. And the CEO, here's the CEO's quote. When Carrie Tolstad's retirement was announced in July, Wells Fargo CEO John Stump called her a dear friend, a role model, and the standard bearer for our culture. So the standard bearer for the culture, bottom line, folks, okay, was in a monster fraud. You know what? This is the weirdest thing that I think, that it seems that none of us, no matter what I can't understand, is that people go to jail for fraud every single day. None of the banks ever go to jail for fraud.
Tom, if you and I had pulled something like you or I had pulled something like this, not you and I, you or I had pulled something like this, we'd have to go to North Korea to hide from the feds. You know what I mean? I mean, like, I don't know how this woman's walking around. I mean,
it's when I thought about I really thought in 2008, coming out of the 2008, that someone would fry, because I thought it was it's so far over the top. You know what I mean? That but not only no one fried, folks. Okay, what those banks are trying to do is trying to stop this financial regulatory aspect of it too. And it's like, I mean, we're talking about even right up to last week, and they're probably still. It's not going to stop Congress. Okay, they're going to still try to stop it, because they're so paid off by these banks. I mean, the soft money is just incredible.
It's despicable.
You know what I think is going to happen, though? I think that that someone's going to fry, and the reason being, and it doesn't even have to do with the aspect of what they did here. It has to do with the aspect that you have 2 million accounts, and then you think about how much. What does it mean when someone's taking your name and all this? Okay, that you have these employees inside your account, folks, and I'm thinking, okay, how many times that we don't know that's where these accounts are getting sold, and all of a sudden these credit cards and debit cards are getting tacked on like beyond belief, right?
It's a federal crime. They should get prosecuted.
Yeah, unreal. Well, listen, man, until tomorrow morning at 8 o'clock, it's a beautiful thing.
I'll be back.
Thanks, brother. Have a great one.
All right.
You stay right there, folks. I'm coming right back. And, of course, our man Steve Rhodes is going to be coming up at that workshop. Check it out on TFNN.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. And as we go over these markets, folks, if we take a look at the SPY, what you have is this. The SPY closed out here at $213.15. Gave it up in price. Had lighter volume, setting up a B to C of an ABC structure on the way down. Now, the SPY would need more than 168 million shares as it crosses $212.31, or 213.15. I do expect what we're going to see is it's going to try to do it tomorrow morning. And it's real possible that what you'll actually get is that you'll jump the creek. And if we go over to the futures and take a look at the futures and talk about specifically what that would mean, is that the future market out here closed at a price point of 21.15. These futures, more than likely, we'll see whether they open down 10. They open down 10, they open down a little bit 10, 15. Bottom line, that's jumping the creek. Jumping the creek is going to be very dangerous. Why? Because what that does, it gets back inside the lower range. That means that we had a break top side. That break top side happened on July 8th, and then it failed on price, failed on volume. And here's the kicker. Not only failed on volume, I mean, you got the highs on light volume, but then you came back inside the lower range with huge volume. When you do that, your probability goes much higher that you're going to get down to the bottom of that range. And on the future S&P, you're talking on this contract, which we're trading the December contract now, that would be 1972. Right now, you're at 21.15, so it's a big number. What we're also doing is that we're coming into option expiration. So what that does, we have volatility, but that means that the volatility can actually expand and expand pretty tremendously. The NASDAQ Composite. Now, the NASDAQ Composite held up these markets, folks, and Apple in itself did a pretty good job. Well, it was Apple and Apple's suppliers. What you had is this. Apple was up 3.5%. You had Skyworks up 4.3%, and Avco was up 2.6%. All that is all about Apple. That is what held up the NDX 100. Bottom line, we'll see whether it can do it another day. Big number. If we go over to the IBB, what you're going to see, however, is that the IBB, which is the NASDAQ Biotech Index, that failed on price, failed on volume. The IBB got to a higher price, got to $289, failed, closed at 285. We did volume of 1.5 million versus 3.7. That looks like it's also building cause. to get into much lower price. The much lower price there we're talking about is approximately down at the 250 mark. So you can expect high volatility going on through the night. If we finish up with the bond market, what you're going to see inside the 10 and the 30, 10-year note, 30-year bond, that also bounced on lighter volume. We're at 130.11. These also look like much larger ABC structures on the way down. If we take a look at the TLT, you're going to see it quite clearly. The TLT out here, which is the 20-year bond fund, bottom line, got back into where it broke topside from. That was June 24th. That price point is $133.32. And yesterday we hit $133.36. Monster volume. 15 million shares you're down with. Today you bounced up with 7 million. That is setting up a very large ABC down. Your A point on this is $140.42. Your B point is $133.36. So you're talking $7. Your C point is 134. So you're dealing there with 135. You're dealing there with 128, and 128 will get you down into the May 15th. That 15th, May 18th swing area. So bottom line is that whether the Fed goes up or not, the market is going up on short-term rates, folks. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. Look forward to speaking right back here tomorrow morning, 8 o'clock. Wow! Go get them, folks.